Good afternoon, everyone, and welcome to Stock Market Today. It's Alexis Garcia and Ed Carson here to break down the market action in today's session for Friday, December 22nd. And we'll also take a look at how the week turned out. And Ed, a back and forth day in the market, but the indexes extending their win streak ahead of the holidays. But a pause here might be a nice little gift for Santa to leave investors.
Yeah, it would be nice, but the market does not seem to want to stop. I do want to take a look at a few stocks that are showing positive action: Nvidia, Samsara, and steel pipe maker Tenaris.
All right, well, we'll take a look at those three names. But first, let's check on in with the indexes. The Nasdaq finishing the day up 0.2%. The S&P 500 also up 0.2%. The Dow closing fractionally lower. And small caps again leading the way with the Russell 2000 up about 0.9%. So Ed, let's take a look at the NASDAQ. And as you were talking about here, I mean, the bull's fully in control. Arusha Perez was talking on IBD Live this morning about this being a lockout rally, but give us your thoughts on the market action.
Yeah, I mean, I agree with Arusha. And what he means with the lockout rally is that people are looking to get in, and it's hard to get in because there hasn't been a pause. There was a pause right here, and that turned out to be very healthy. It was at a natural place in the market. A lot of buying opportunities presented themselves, and then we went off on another run. But now we've run up again. Wednesday's sell-off seemed very scary, but instead of being an R-rated, slasher flick, it was more like just a jump scare.
It's a real fake out.
It was a fake item. It's like, it was real. It was real, but it didn't really last, and we bounced right back. It's nice to see that the market, didn't, start cascading down more than just a couple of hours, but we are, getting up already at elevated levels. We're at 7.8% above the 50-day line. That's an area where, well, honestly, where you might expect a pullback. It doesn't have to be a big one. It doesn't have to be right away, but it's just something that investors should be thinking about. That it's like, well, how much do I want to add to position when, if the market is, starting to look like it may need to take a break.
All right, well, let's hop on over to the S&P 500 index. And again, similar action here, just be a natural place to pause, but it doesn't seem like it's been wanting to do that.
Yeah, and just to show how it would be a natural place to pause, well, the Nasdaq's at the 15,000 level. Well, the S&P is really close to its all-time high. So this is a place where it's like, well, this might, see a pause here, just as we paused the 2023 highs a few weeks ago. But again, as you say, wasn't really taking a break. And then, there's a lot of positive economic news. There's just general bullishness heading into the Christmas weekend. We only really got started with the Santa Claus rally. That's, I guess, like with the shopping season, the Santa Claus rally comes early nowadays. So nice action again here. Again, just be nice to take a break for a week or two.
All right, well, now let's take a look at the Dow and get your thoughts there.
Well, the Dow actually has already hit an all-time high a couple of weeks ago, and it's continued to move up and barely rose this week, but still rose. And so it's looking like the other indexes.
All right, let's hop on over to small caps. And Ed, it's great to see them again charging higher and more evidence that this market rally is really starting to broaden out.
Yeah, I mean, we've seen a lot of signs in the last few weeks that the market rally is really strong, because the early 2023 rally, a lot of it was, concentrated in the Magnificent Seven or 50 to 100 growth stocks, and that's plenty of leadership for investors, but still nice to see that broadening out. There's a lot of measures that show that breadth is improving. Today, unlike the other indexes, the major indexes, the Russell 2000 actually got above Wednesday's high. It pulled back a little bit, but it actually was punching higher. It wasn't slowing down at all on a weekly basis. You can see it's trying to decisively clear this 200 level. The Russell 2000 is at 2000. So this whole area is just trying to clear that, just like with some of the other indexes, around some key levels that you might expect to pause, but not pausing yet.
All right, well, let's jump on over and take a look at the 10-year Treasury yield, up slightly today, but kind of holding steady. And we had some key inflation data today showing that prices have fallen for the first time since 2020. Doesn't really feel like it, but that's what the data is saying. How do you see this impacting the market?
I mean, I think at this point the market is, well, obviously the market has rallied in large part because the yields have come down. Inflation finally seems to be cooling quite a bit, and even better, inflation's cooling while the economy still seems to be doing okay. I mean, that's a year ago, it would have been really hard to believe that you could get inflation to start really coming down without triggering an recession. And right now, that seems to be, we almost have that Goldilocks scenario, and
Mhm.
that's been a huge reason why the market has rallied for 8 straight weeks.
No, it really does look like a soft landing might be possible. We'll see about that. But let's take a look at some of the sector ETFs, starting with IGV. That's the software sector. And again, as you were kind of talking about, that was up slightly today, about 0.2%, extended from a mid-November breakout, but really kind of starting hopefully to tighten up here a bit.
Maybe there's for a few days, but it's continued to move sharply higher. There's just a lot of strength in this sector. I mean, it's just been riding this 10-day line, which is something really aggressive. It's again, it'd be nice if it's just sort of leveled off and paused. There's some proto handles out there in the software space, but they haven't really developed because it keeps going up. Uh, Really a lot of strength in here. And it's even stronger underneath. This is sort of dominated by some heavyweights that haven't risen as much as some of the cloud software names.
All right, well, let's jump on over to SMH. That's the Van Eck Semiconductor ETF. And again, that one also looking a little bit extended, that had basically flat today. What's your thoughts on this?
Yeah, and again, you can see how it was such a nice thing here when the market was pausing, chips paused, came down nicely, had a really provide an opportunity. Maybe it's going to pause here. We'll see. A big part of this is Nvidia, and we'll look at that in a little bit. That one is setting up once again as it's paused for a few weeks and really for a few months.
All right, let's hop on over to industrials. That's XLI. This one, technically in a buy zone. And again, inching up today about 0.5%.
Yeah, this is again. There's a lot of sector strength outside of tech, and that's sort of come on. A lot of things, definitely an area where investors should be looking. Not there's Boeing, GE are big names, but there's a lot of smaller names that are doing really well as well.
All right, well, let's take a look at the Spider Metals and Mining ETF. That's XME. And this one, Ed, really charging higher after that December 14th gap up. That one also up slightly today.
Yeah, so a couple of huge weeks for XME, seeing a lot of steel and coal, copper, iron miners. They're all rallying. Some of it's the weaker dollar. Maybe some hopeful signs about the global economy. But wow, this was not looking so good a couple of weeks ago, and it is really powering ahead.
All right. Well, you mentioned Nvidia, a name most investors are familiar with. So let's take a look at that chart because, as you mentioned, that is basing after taking a little bit of a pause and also some neighboring base action right next to a double bottom base.
Yeah, because can't quite call it a base on base because it's not really above, but in a couple hours, the pattern recognition will probably show this as a new flat base because it's 1, 2, 3, 4, 5 weeks on a weekly chart. So yeah, so right there, it found support at the 50-day, 10-week line. It hasn't really been leading, but it hasn't really lagged either. The relative strength line has sort of moved sideways for the past week, but it hasn't really lagged like some stocks that have based. So this is still, could be ready to go. There hasn't been a lot of positive volume. There was some, a week or two ago, which was nice, finally to see some positive, some gains on higher volume. So that's an issue, and that's one reason why there is a worst possible E accumulation distribution rating. I don't want to discount that. At the same time, this is the stock of the year, the best S&P 500 performer. It's probably the company of the year. When you think about earnings growth, when you think about AI, it's really Nvidia. And I know there's other players in there, but if nothing else, the health of Nvidia will be very important for the health of the market rally for sure.
Right, and potentially setting up to be actionable here for investors. Let's take a look at Samsara. That's ticker IOT. Fading from intraday highs, but closing about 0.7% up today, and still technically in that buy zone after breaking out of that cup base beginning of this month.
Yeah, powerful earnings move, and it was nice to see it hold it. It's been volatile, but again, ultimately, it sort of held there. It's been volatile on a daily chart, but a little less so on a weekly. And so that's sort of interesting here is that on a weekly, well, that is going to show a 3 weeks tight pattern. Again, just let Market Smith give it an hour or two, and this will start showing a little blue area here designating a tight pattern. That's often a place where you can add on shares because it's right above the top of a base. This could probably be a place where you could start a position. I would suggest not waiting to get to the top of that 3 weeks type, but maybe just using, a downward sloping trend line, or just using today's high around 35 as an entry point in there to get into the stock. A lot of growth in here. This is now turning profitable. That's it's an AI play as well, so a lot of excitement on this one as well.
All right, finally, let's take a look at Tenaris. That's ticker TS. And this is also working on a flat base, inching closer to a buy point.
Yeah, at intraday, it got above 35.31, which was above the bulk of the base. That was being early entry, so you could use that or just use today's high as a way to enter this one. Tenaris is a specialty steel play. It actually has fairly high margins on its steel products, and part of it delivers steel pipe directly to the energy industry. So this is also, pretty important. It's definitely going to have key off oil prices in a way that most steel prices won't. This is actually in a oil services ETF. Is this steel play, even though it's clearly not an oil services company. So this is one just been hanging on. The steel industry's showing some strength. The relative strength line is pulled back here a little bit as its base, while the market has gone up, but it wasn't a big correction, and when you consider the fact that it's exposed to energy and it didn't really break down below the 50-day line when oil prices were tumbling, I think this showed a lot of resilience in that regard. Some solid growth as well. So this has been a strong performer and definitely something to be looking at. This was our stock of the day today. Jed Graham, our economics reporter, took a look at this name.
And you can definitely check that out on investors.com. And Ed, now let's talk about what investors should do to prepare for next week. It's a shortened trading week, but also the start of where we hopefully might see a Santa Claus rally.
Yeah, I actually, it's like maybe I'm just the little Grinch here, but I was saying like it would be great if we had a pause. I mean, could we have just a little lump of coal maybe next week? That would be nice, but you just have to prepare for it. And like you do have to know that there's often positive gains at this time of year, but the volume will be thin, and so there might be some swings into it. That's just something to keep in mind. For one, it's like because the market's a little stretched, that raises concerns. There are a few buying opportunities, not that many. If you may just want to be standing pat. You may even consider taking some profits. There's also the whole tax selling implications. If you have a big gain, do you want to wait until January? Well, guess what? Some other people might be thinking the same thing. So there's pluses and minuses to selling now or waiting till January to do that kind of thing. Look in your watch list. Look for the stocks showing relative strength. There's not necessarily a whole lot of buying opportunities yet because the remarket hasn't paused. But as you're watching those lists, and if you see some things starting to develop, you want to be ready. So if we do have a more favorable environment for buying stocks, you'll be ready to find those names that are perking up right as they clear those entries.
All right. Well, good stuff, Ed. Thanks so much. And that's it for today. And as a reminder, the markets will be closed Monday for the Christmas holiday. So we'll be back with more market analysis on Tuesday morning, starting with IBD Live. You can head on over to investors.com/IBD Live for all the details there. And we'll see you right back here on Tuesday after the close. And from all of us at IBD, we wish you and your family a very Merry Christmas.